Welcome everybody to today's market recap and analysis session. I believe today's either the 20th or 21th episode, so we're almost running at this for 2 months now and 1 month now, and we'll get to that 1 month mark pretty soon, and we're not going away anytime soon. So today was quite a crazy day, as depicted by this right here. And today was essentially a day for me to test different things regarding order flow, to see what works on high impact news days such as this. It's not typical for me to trade on FOMC, CPI, NFP, and maybe PPI. These are all days where you should not be taking any trades, especially if you are a price action or order flow trader like myself, because price action and order flow can be very difficult to comprehend on days like the news events which I've just mentioned. Now, let's dive into the test trades which we took, and then we'll dive into the overall market analysis. So today we marked out our liquidity levels, one main liquidity being there, two below, a 2-hour demand zone there. We had bookmap liquidity. We had bookmap liquidity right here and right here. We had our main liquidity for the day being at these highs. And yeah, that's essentially it on ES. On NQ, we had a bit more to chart out, but essentially the same. Main liquidity there, main liquidity and supply zone 3-hour there, main liquidity there, main liquidity there, 2-hour demand zone with main liquidity and main liquidity at the lows as well. And prior to the day, we were essentially looking to see if we can make a reaction off the sweep of this liquidity level right here. We want to know if we will go up or down from that liquidity level. And since today was FOMC, it was quite difficult to gain a grasp on what exactly would happen. Now, since we were waiting and looking to catch a reaction on this liquidity level, there wasn't much confluence for us to work with in terms of order flow as well. So market open, we saw price come up, take this liquidity level, and then we start rallying up down while overall making an uptrend, right? We're making higher lows, and we were making higher high until we made a lower high on both NQ and ES, right? And from there, we saw a dump down right after we made this lower high. Potentially some structure traders could have used this indication of a lower high to understand that price might have more probability of breaking the trend and further pushing down. But we look for a retracement to get in, or we look for confirmation to get what we want using order flow, right? So once you saw the break of this trend and a quick flush to the downside, we wanted to see if sellers could continue going down till bookmap liquidity area down at over here. Now I'll show you how bookmap looked during that time on ES, right? We flushed down, we broke this key liquidity level on ES, and right away after that, we created a barrier and essentially flipped liquidity as demonstrated right here, right? And so I was thinking potentially we can go here, bounce up there, and then continue going down, because this was a key level and we did bounce, hoping for a rejection off of it. But unfortunately, this was not the greatest idea, because Although this can be valid at times, we learned that, especially on high impact days, the flip of liquidity on order flow should not be considered as high probability as we thought it was, right? So we wanted to see if that would continue, and we did get price to go our way for around 100, almost 200 ticks, but we did get stopped on that trade because, let's look on Bookmap, because we saw price just consolidating above these levels. We took this liquidity level down here and then just continued to make our way up. This barrier disappeared. Now there's room for us to go to the upside, and since we did not break below, there's no real confluence for us to continue going down. So the overall idea for this first trade should be invalidated because we should not even consider flips of Bookmap liquidity in terms of barriers, because that doesn't make sense, and that's something typical that happens to the market simply because we're near that price. For example, over here, could you consider this a barrier? Of course you wouldn't consider that a barrier. You only can consider barriers for sudden pop-ups of things like this, or it could also be orange. So technically, our barrier could be this, but we comprehended this as a barrier, which eventually caused us to get stopped out. Now in the second trade, once we saw this flush up, we wanted to see if we could trade off momentum and capture to those highs. Remember, we are still flat today. Never trade on FOMC, CPI, NFP, or maybe PPI, especially if you're a price action trader, because price action and order flow can be quite unpredictable during these days. Now, we wanted to catch the momentum off of this, but unfortunately, price went our way for a bit of time until we got stopped out. We caught 300 ticks, which would have made a 1-to-1 trade, but we are just testing, so we let the trade play out, which got us stopped. So let's take a look into what happened there. Again, shout out to Live Alex with Think with Bookmap, free Bookmap resource. I highly recommend you to check him out. Alright, let's take a look here, right? We started flushing our way up until suddenly this large splurge of liquidity came in, right? And typically when you have something so significant like this, 1,157, that's quite insane. We ought to come down to that level at some time. So I want to see what we actually end up doing. Okay, turns out once you came to those highs, barriers started to form, passive barriers. These are not main barriers. The barriers started to form, and this liquidity level did end up holding. Let's see, I'm thinking that we might come down here and make our way up or push below, but we have to see, right? It looks like we did not even touch the level. Yeah, so we did not even go down to the level, but we went to the relative area, and this shows you why NFP is quite odd, because on usual days, I can almost guarantee that price will head to this liquidity level and at least tap into it. But on NFP day, we came to VWAP and just bounced off it, which is quite crazy, but it is what it is. Now is where this is the time where we start getting this crazy pump, which we'll go over later in this video, right? So this trade was simply a momentum play which did not carry out because of a sudden splurge in liquidity at the bottom, which acted as some sort of magnet. And buyers did not have any confluence or any target at all on the upside. And when there's no target on the upside, why would price want to keep continuing to push price higher right here in this period of time? Of course, it moved up because of fundamental and news, but prior to the news release, there was no reason for us to really go up to this level, seeing as we broke liquidity already and swept. Now, another thing I want to emphasize about that applies to both these trades is that POC was right here, right? And we wanted to go away from POC when price simply wanted to come back to POC, right? So this shows that we were trading against POC or trading against mean reversion, while price simply wanted to follow mean reversion, right? That's similar to what we did here, and if we took profit at POC, we would have won on that trade, but once again, we're letting it play out because these are test trades and not actual trades. We are flat for the day, I want to emphasize once again. Now, maybe POC plays a larger role on NFP days and high impact news days than other days. We're just going to have to keep testing that and see on high impact news days. It makes sense though, because on days where lots of news is expected, buyers and sellers want to be in uniform with each other prior to the release, which does make sense why there's such a strong impact on mean reversion prior to the news release. Now, let's talk about what the hell happened after, right? Prior, we saw that Trump said there will be a 90-day pause on tariffs, and then White House said it was fake news. Well, now the 90-day pause is official, and that is insanely great news. The fake out of the pause actually made this movement much stronger, simply due to psychological reasons, but the 90-day pause caused this large move, and with the 90-day pause, he is not applying that to China, and China's tariffs are now actually 125%. So we may still be expecting quite a rough time with volatility because the US and China may keep going at it in terms of this tariff battle. But we're gonna have to see. Tomorrow we do have CPI, day after we do have PPI. We have to see how those play out, and we have to see how Trump, the government, and China work through this conflict of trade, and hopefully we come to a decent trading environment soon enough. But good trades can still be made even in environments like this if we know when to trade, when to stop trading, how much to risk, and all of the essentials. That's essentially all I have here for today. If you have any questions regarding the concepts I've discussed in this video, please join the Discord. The link is in the description, or leave a comment down below. I'll answer them whenever I see them. Thank you so much, and I'll see you guys tomorrow for the next market analysis video. Goodbye.